Every single day, thousands of Iraqi dinar holders are quietly losing money without even realizing it. Most investors spend years focusing on exchange rates and speculation, but the biggest threat to their profits often comes from something much more preventable: bank fees, processing costs, and tax obligations they never prepared for. If you're holding Iraqi dinar today and have never taken the time to understand how a future cash-out event could affect your bottom line, then this analysis may be one of the most important pieces of information you hear this year. The reality is that the difference between a successful exchange and a disappointing outcome may have less to do with the exchange rate itself, and more to do with what happens after the exchange takes place. While investors continue watching for signs of monetary reform, Iraq's financial system has been undergoing significant changes. The Central Bank of Iraq has been working to strengthen control over currency flows, reduce dependence on the US dollar, improve banking compliance, and expand electronic payment systems. These efforts may not attract major headlines, but they represent important steps toward building a stronger and more modern financial infrastructure. When a central bank focuses on transparency, regulation, and international standards, it creates the foundation necessary for long-term economic growth and stability. Whether this eventually results in a formal revaluation, gradual appreciation, or simply a stronger financial system remains uncertain, but the direction of reform is clear. One of the most overlooked issues facing Iraqi dinar holders is the impact of bank fees. Every major currency transaction involves costs, and financial institutions do not process exchanges for free. Depending on the bank, exchange service, or financial intermediary involved, fees can range from a small percentage to a much larger amount. While these costs may seem insignificant at first glance, they can quickly become substantial when applied to a large currency position. Investors who fail to understand fee structures ahead of time may find a significant portion of their gains disappearing before the money even reaches their accounts. This is why preparation is critical. Understanding which financial institution you plan to use, what fees they charge, and how they handle foreign currency transactions can make a meaningful difference when the time comes to exchange. Taxes represent another major consideration that many investors fail to address until it's too late. In many countries, including the United States, profits earned from currency exchanges may be considered taxable events. The exact treatment of those gains depends on factors such as the investor's country of residence, how long the currency was held, and the structure of the transaction itself. Because tax laws vary significantly, consulting a qualified tax professional before any exchange occurs is essential. Proper planning can help investors understand their obligations and potentially reduce unnecessary financial surprises. Waiting until after the exchange has already taken place often limits the options available and can create avoidable complications. At the same time, the broader economic environment inside Iraq continues to attract attention from investors around the world. The official exchange rate established by the Central Bank of Iraq has remained relatively stable, reflecting a deliberate policy designed to maintain economic control and financial confidence. Analysts continue monitoring the difference between the official exchange rate and the parallel market rate, because this spread often provides insight into the effectiveness of monetary policy. When the gap narrows, it can indicate that reforms are gaining traction and that the financial system is becoming more efficient. The central bank's ongoing efforts to align these rates are viewed by many observers as an important step toward broader financial modernization. Another key factor influencing Iraq's future is oil revenue. Iraq remains one of the world's largest oil producers, and energy exports provide the majority of government income. Strong oil prices strengthen the country's financial position, support government spending, and contribute to the accumulation of foreign currency reserves. These reserves are especially important because they provide credibility and support for the nation's monetary system. A country seeking greater financial stability must maintain sufficient reserves, and Iraq has made notable progress in this area. Investors who follow Iraq's economic development closely understand that reserve growth remains one of the most important indicators of long-term financial strength. Beyond oil, Iraq continues pursuing a broader reform agenda focused on strengthening the banking sector, encouraging private sector growth, modernizing financial infrastructure, and improving transparency. Progress has not always been rapid, but international organizations such as the International Monetary Fund and the World Bank continue engaging with Iraqi authorities and supporting reform efforts. This ongoing cooperation signals that the international community recognizes Iraq's potential and remains invested in its long-term development. While challenges remain, continued institutional support contributes to greater confidence in the country's economic future. For Iraqi dinar holders, preparation remains the most important factor regardless of what happens next. Investors should understand their banking options, evaluate potential fees, seek professional tax guidance, and stay informed about developments within Iraq's financial system. No one can predict with certainty whether the future holds continued stability, gradual appreciation, or formal revaluation. However, those who approach the situation with patience, discipline, and careful planning will be in the strongest position to respond effectively to whatever opportunities emerge. The Iraqi Dinar investment space rewards informed decision-making rather than emotional reactions. Success is not determined solely by exchange rates, but also by the quality of preparation behind every financial decision. As developments continue to unfold, staying educated and maintaining realistic expectations may ultimately prove to be the most valuable investment strategy of all.